Hello, and welcome to Track Your Dividends. Today, as a part of a new series on this channel, we're going to be looking at and analyzing the top stocks being traded on TrackYourDividends.com. Today, we're going to be looking at Realty Income Corp, ticker symbol O. First, we're going to be looking at Realty Income's business, then we will look into their dividend history, and finally, try to come up with a fair value for their stocks using the dividend discount formula and price to funds from operations, or price to FFO. So, let's get started. First, what does Realty Income do? Realty Income has structured itself as a REIT, or a real estate investment trust. Their goal, as listed on their investor relations website, is to provide shareholders with dependable monthly dividends. As a REIT, they are required to annually distribute at least 90% of their taxable income in the form of dividends to shareholders. So, what's their business model? Realty Income purchases commercial real estate and leases it to tenants under long-term net lease agreements. Generally, these leases are 10 to 20 years long. The lease payments generated each month are what they use to support paying shareholders monthly dividends. Realty Income currently owns 6,483 properties, the majority of which are U.S. properties. This pie chart shows us the percent of where Realty Income's annual contractual rental revenue comes from. This information is from the most recent 10K, which was released in February of 2020. It can also be found on their investor relations website. Looking at this pie chart, it is very clear that most of their annual revenue comes from the US, with only about 4.4% of it coming from properties owned in the UK. Just a small thing to note is that properties owned in Puerto Rico are also included in the US annual revenue percentage. We can also split this chart up further and look at the percent revenue based on state. Looking at this, we can actually see Realty Income owns plenty of properties all across the US and doesn't just rely on a small portion of states to bring in a majority of revenue, which is a very good sign. Now, there are larger states such as Texas and California that both bring in more revenue than the whole of the UK. However, this is to be expected, as those are some of the largest states in the US. Another note about this pie chart, the small blue piece that's slightly popped out is the UK again. Looking at the UK piece compared to other states, we can see that Realty Income's revenue is quite proportional to the size of the state and/or country. Now, there are some states like Alaska, Idaho, Montana, and about 21 other states that bring in less than 1% of Realty Income's annual revenue. After that, however, the majority of the states are quite close to each other in the amount of revenue brought in annually, and Realty Income are currently expanding more in the UK, with an increase of 2% revenue just this year, going from 2.4% in February 2020 to 4.4% in October of 2020. So, we know where Realty Income makes most of their revenue. However, an even more important aspect of commercial real estate is having a diverse portfolio when it comes to the different industries you lease property to. Looking at this pie chart, we can see all of the different industries that Realty Income leases property to, and their annual revenue percentage. From this, we can gather that Realty Income relies on a small amount of industries to bring in the majority of their annual income. This is further proven when looking at these two pie charts of Realty Income's top 20 tenants. The top pie chart showing leases per tenant, and the bottom pie chart showing revenue percent per client. We see in these two charts that most of these tenants fall under one of the 7 industries that account for more than 50% of Realty Income's annual revenue. This may at first seem like a bad thing. However, having 7 different large and stable industries account for just a little over 50% of annual revenue is great and shows a great amount of diversity in their portfolio, while at the same time not investing heavily in risky industries. Their portfolio diversity goes even further too, as if we take a look at their top 20 tenants again, we see many different companies from the same industries. So not only do Realty Income have a diverse portfolio when looking at what industries bring in the most revenue annually, but they also make sure to lease property to multiple companies within each industry. This diversification of not only industries but companies inside industries is incredibly good, and not only helps the company bring in more revenue, but can also allow the company to weather stock market crashes and recessions, such as the recent crash from COVID-19. Looking at occupancy rates during the stock market crashes of 2008 and the recent one of COVID-19, Realty Income has never dropped below a 96.6% occupancy rate on their properties. This shows that Realty Income's revenue is very stable, and the tenants they lease to do not tend to default on their leases, even during financial crises. Now, Realty Income's main goal is to provide shareholders with dependable monthly dividends. So let's take a look at those. For the past 23 years, Realty Income has continued to increase their dividends. As of the making of this video, they are sitting at a dividend yield of about 3.8%, with the dividend paying roughly 23 cents a month. Looking into the dividend history, we can see that throughout 2019, there were 5 separate increases in the monthly dividend. Looking at each individual increase, in January, April, June, and September, the dividend increased by about 1/20th of a cent, and in February, it increased about half a cent. This half-cent increase in February seems to be recurring, as it also occurred in February of 2020 and previous years, going all the way back to 2015. Currently, the annual dividend payout for 2020 is expected to be $2.81. These are all really good signs about Realty Income's dividends. And looking at TrackYourDividends.com's dividend safety score, we see that this dividend has a very good payout ratio, dividend growth, and growth rate, as well as a very good dividend yield and EPS trends. All of this combined has earned this dividend a dividend safety score of 82 out of 100, which is very, very good. Okay, so now we know what the company does and have a good understanding of their goals, business model, and dividend history. We can now go ahead and attempt to assign a fair value to the company. Before that, however, let's take a really quick look into the growth of the company in the past 5 years. To check and see if and how well the company is growing, the main thing we need to look at is their income statement and see how their rental revenue has grown. So, if we look at Realty Income's income statement on seekingalpha.com, we can see that the rental revenue in 2015 was around $976.9 million and has now grown to be roughly $1.5 billion, with about a 10% growth per year. This shows that Realty Income has had a substantial growth over the past 5 years, with their total rental revenue growing 35% over that time. Okay, now to find a fair value, we will just look at their price to FFO. This is similar to a regular company's price to earnings, but we use it for REITs. This value will give us a good general understanding of whether the stock is over or undervalued. Realty Income's price to FFO is sitting around 18 as of right now. This is quite good because, in theory, the lower a company's price to FFO, the more likely they are to be undervalued or fairly priced. And looking at a few other REITs for the sake of comparison, a common price to FFO value is around 22. So 18 is on the lower end, and that's a good sign. Now, let's move on and take a final valuation. For this, we'll be using the dividend discount valuation method. After doing this, we come out with a fair value for the stock of around $70.50. As of right now, November 2020, Realty Income stock is valued at around $58. So, as we suspected after looking at our price to FFO, they are currently undervalued. So if you were really looking to buy a REIT or wanted a good stock that pays monthly dividends, then Realty Income is looking like a really good choice to go for right now. Thank you for watching our video. Please let us know in the comments if there are any stocks you would like us to look into and analyze, or if you have any questions about Realty Income. Don't forget to like and subscribe as well if you haven't already, so you don't miss out on our future analysis videos. And remember to check out our website if you haven't already to easily keep track of your dividend portfolio. Thanks again for watching, and we'll see you in the next video.